Hello, this is Joe Pryor, the virtual real estate team in Oklahoma, and it is the first week, actually December 7th of 2022, and we're coming at the end of the year. And now we got to start thinking about 2023. Pretty much everything is done in terms of investment. We have properties closing between now and the end of the year, but it's time to really look at strategies that we want to employ next year. Now, we can't say exactly what's going to happen at this point. We can make some predictions, but the one thing that we can probably say is true is that the Fed has indicated that these 75 basis point increases are a thing of the past, that consumer price index is better. They think that they're beating inflation. The core inflation rate is really down quite a bit right now. And so the December rate increase is going to be less. There may be one rate increase and they're going to pause. And that has buoyed the market. So we've already seen interest rates, mortgage rates going down. And I hadn't seen that in the last 6 months. So that's very, very positive news. So this is good news for investors because that interest rate is very crucial for you in terms of how much cash flow that you can get out of a property. Now, the second thing that we're doing in 2023 that we've already started doing is adjustable rate mortgages. And the reason why is, well, we normally don't recommend that, but with rates as where they are right now, even coming down, knocking off another half point for 7 years in one that's fixed, an arm that's fixed for 7 years, is really a great idea because, we're going to see people do this and then do a refinance at a later time or sell the property at the end of 7 years and do a 1031 tax deferred exchange. Another way to look at it. The other thing I did in a previous video is new versus existing. What I said in that video right now, strange as it may seem, that new construction per square foot on a brand new home is less than a lot of existing property, even that's 15 years old and doesn't make any sense. It shouldn't be that way, but that is the case right now. So in going into 2023, we think at least for the first quarter that you really want to go into new construction. Now, maybe the realtors and the sellers of their property are gonna get, some reality testing coming up that they're way overpriced at this point, but it hadn't happened yet. But we will be looking in 2023 again at existing property if it's priced right and it makes sense and if it's in good shape in a good neighborhood. But right now, going into 2020 new, we probably will be doing some existing, I have a feeling, because at some point people are gonna have to reduce prices. So, the thing is, right now, I think is a really excellent time to buy. The supply chain has corrected itself. Prices of materials and labor is very much down. New construction is going lower. Existing is also going to go lower because it has to, because people are still pricing like it was the pandemic pricing with the low rates. And so I think you're going to see a lot of opportunity to buy in 2023. Now, I think there's still ability to have some volatility in the market. And because of that reason, I think that we're going to be looking at things that are finished or almost finished where you can do a 60-day or less interest rate lock so you can be secure with that interest as versus something that's out of the ground that takes 6 months to build where we can't really predict what's going on in 6 months. So in 2023, if you're dealing with this, we're going to deal in 60 days or less. And that's the other thing that's going to change. I think it's going to be a great year. I think that the pandemic is going to lessen even further in 2023. It's not going to disappear. Supply chain is better. Rates are going down. I think it's going to be an excellent year if you're an investor.